Okay, everyone, welcome again to another video on the financial analysis, company analysis of businesses that are really hot topics in the news right now and everyone's talking about. Today, we want to talk about Uber. And in England, there was a recent court judgment that declared that drivers are now officially employees, at least in the UK. It would be interesting to see what it's like in the rest of the world. So Ted and I were talking about them, thinking, well, what does that mean for Uber's finances, and what could that mean to its share price? So Ted, take it away. I'm really interested to see what their finances show.
Okay, so you're absolutely right. Hello, Moeed. Good to see you again. So here we go. Here's the income statement, and we're going to pick up some key numbers from this income statement. So first of all, look at the top line. On the right-hand side, we've got 2019. That's the latest set of accounts. So we're kind of looking at what the trend analysis that's going in this direction, and sales or revenues grown from 8 billion up to 14 billion. So Uber, they're expanding, they're growing, they're getting out into the different markets. The cost of revenue is effectively what they pay their drivers. So this is really the cost of the sale. And you'll see here that they're working at about a 50% margin, which basically means that every time you take a taxi with Uber, 50% of what you pay goes to the driver. Okay, that's a kind of now this is the key number, therefore, because if you have to employ your drivers, then you've got to give them sick pay and holiday pay and pay national insurance and pay employees national insurance, and you've got to administer all of that, and the cost is just going up. So we're going to expect that this cost is going to start to go up, which means that the profitability is going to go down. Now, the problem from Uber is they really don't like this. Look at this line here. This says loss from operations. Moeed, I don't need to tell you that the basic finances make sure that what you sell costs you more than what it costs you to buy what you sell and to run the business. So they're still making this 50% margin, but the cost of running the business, which is all of these numbers put together, which is 22.7 billion, means they're making a loss. And that loss is getting bigger, as we see from those numbers. So it's a loss-making company, and as it grows, it's making an increasing loss. The operating loss margin has gone from 50% up to 60%. It's negative 60% loss. And that translates into a bottom line loss down here. Okay, there's the net profit or the net loss effectively.
Interesting that loss was so large in 2019. So it'll be interesting to see what the 2020 figures are going to show.
Absolutely. So, well, yeah, I mean, don't forget, yeah, absolutely. I mean, nobody's taking, we're all locked down, so nobody takes Ubers, for example. They've still got that flexibility that they, and this is really, do they employ their people? Do they have to have, do they employ them on 0-hour contracts? It's a real headache if you have to employ your drivers and suddenly, so the whole administrative, I mean, this number here also goes up because you've just got to have systems and people and processes and somebody checking, all the kind of, basically employing people is a lot more hassle, and you've got people who then don't want to work, and you've got redundancies and all that kind of stuff. So it makes life really, really complicated for these guys. Now let's have a look at their balance sheet and see how strong they are. Let's see how whether they can weather the storm. So if we look at their assets, what we see in their balance sheet is they've got a positive balance sheet. So if we look at the bottom line, the total equity is, it's now 15 billion. You'll notice it was -7. So they've got a decent strong balance sheet. But the reason for that is this number here. Effectively, they strengthen their balance sheet by raising additional capital. Some of that is coming from this number here, converting into that number there. But the rest is coming through actual cash from investors. Okay, and with those that cash from investors, what that means is the amount of cash in the business has actually increased. So they've gone from 6.4 to 8.4 billion. Okay, so they've got cash in the business. Okay, they've got a positive balance sheet, but they're making a loss. And if we look at their cash flow statement, and here comes their cash flow statement, we can see that they are burning cash. So this line here, we're looking the net cash used in operating activities. They're burning 4 billion in cash. Okay, so they are not only are they making a loss, they're actually burning cash. So if you've got 10 billion in the bank and you're burning 4 billion a year, Moeed, you can do the math on how long you can survive for. Yeah. Okay, and if you run out of cash, what are you going to do? You've got to go back to your shareholders, and at some point the shareholders go, you know what, I'm not convinced by your business model. So once they run out of faith in you, there's no investment going on. That's this number here. They don't have to invest because it's a software company basically, so it doesn't need a lot of physical investment. And if we look at the cash from investing, here we see the cash from the financing activities. These numbers here, this is really where they're getting all their cash in. So it's all about financing. It's issuing shares. Look, here we go. There's some senior notes being issued, for example, proceeds from stock issuances, etc., etc. So they're raising money on the markets in order to keep themselves alive and afloat. Now, you know, this might be, and here we see, you know, the issuance from the stock options. So there's the 8 billion coming in from issuing additional shares. Right. Yeah. So this might be fine, you know, if you're gonna, you know, if you're sort of, you know, starting to sort of build up, you know, Facebook, for example, made a loss in the first few years, you know, and now, as we've seen, it's a very, very profitable company. But I'm just thinking about Uber, Moeed, and the network effect and how strong it is. How difficult is it for other people to compete against Uber? Is it a winner takes all? Is it that once Uber has got global dominance, that the only taxi app on your phone will be Uber, there will be no other taxis? And I'm thinking, well, at the end of the day, if Uber are charging me X and I can get a cheaper taxi from another app, I'll use that other app. And, you know, if I'm a driver, I could have two apps open. I could have Uber and Lyft open, for example. And I just, you know, I could play one off against the other, which way everyone pays me the most. So part of Uber, I think, is looking at, you know, things like driverless cars. But and what their argument would be is that if the driverless cars come in, this number here, we can just eliminate. We don't have to employ our drivers because we have driverless cars. Isn't that a great idea? Look at the margin. It's going to be massive. Well, we'll break even at best. But I reckon all that's going to happen is that this number is going to go down. So, you know, it's going to be very easy for people to set up apps for driverless cars, whether it's an app for a local one in my regional or a national one. And you don't have to be a national a taxi company. You can just be a local taxi company, and you turn up at the train station, download the app, and drive your driverless car. So I'm not convinced that they've got the network effect, they've got that economic moat, which makes it difficult to people to compete against. I'm not saying it's easy to compete against them, but it's not impossible.
Yeah, and a couple of things to note as well. Research and development in the meantime is going to go up. It's certainly not easy to create and produce driverless cars. So that's one thing. You can already see it went up 4 times between 2018 to 2019.
Yeah.
But also, they're not going to be the only ones who are pushing to provide driverless cars, right? Tesla is there, Absolutely. Google is there. Amazon, I think, said that they were, or something happened. I can't remember. But the point is, they're up against some very big players with a lot of reach and experience.
Everybody's trying to get into that space, you know, and even if they say that they're not, they are. You know, Google definitely are. Apple definitely are. You know, anybody with, you know, I'd be very surprised if Amazon weren't. Tesla, you're absolutely right. You know, and if you're Tesla, for example, you have a driverless car, just do a Tesla app, and then you can hire that driverless car wherever you are. I mean, I'm just, the more I think about it, it's not resonating with me. So let's have a look at the share price anyway, just to kind of, check that.
Yeah, because you're saying they're not making much money, they're not selling enough, they're losing money.
They're not making much money, they're losing money. You're absolutely right. So there is no P ratio because there's no E. Here's the value of the company, 95 billion. So for 95, basically 100 billion, you buy a business which has got 15 billion of net assets, of which a substantial amount of that is cash, and it's burning cash at 4 billion a year.
Doesn't seem good. Ooh. And goodwill's at 80 billion.
It'd be interesting to see whether this sits on the shorts list.
Yeah, that would be really interesting. So that's some great insight there, Ted. So anyone who's thinking about investing in Uber, you might want to watch this video for sure and use it as part of your calculations. So great video, Ted. I learned a huge amount there. So again, everyone, like, share, subscribe. What do you think? Do you think Uber is going to be a growth success story for the next 5 to 10 years? Or do you think that they have just too much against them? They're not going to get enough cash. As Ted said, investors may at some point say, you know what, I'm not convinced of your story. What do you think? So like, share, subscribe, and we'll see you on the next video. Thank you.